Hey, this is Danielle. Welcome to the free video. Today I'm going to start off talking about Netflix because I noticed that Netflix has a couple different squeezes here and it also has an earnings report coming up. If you start off on the daily chart, you'll notice a few things. Number one, we've pulled back a little bit, which is good because you always want to get an edge on your entry. Didn't quite pull back to the 21 EMA, though we got pretty close. That 21 EMA is at 634. Generally, if you can get a pullback to that level, that's going to be the best spot where you can buy the dip with an edge. But, we got pretty close. And now we're back up above the 8 EMA again. Another thing that I like about this chart is the fact that we did have declining volume. It's kind of pulling back a little bit. Generally you're always going to want to get a swing trade on a pullback. So because we have that declining volume, basically what I'd look for is a shift higher in volume, just kind of like a reversal here, where suddenly you see a bunch of incoming volume and then that creates momentum and that'll be a breakout. And ideally, you can identify which direction it's going and then you can ride that momentum. So looking at this one right here, it has been consolidating for quite a while. Yes, it did have a bad move last quarter after that earnings report, but I think that it recovered phenomenally. And so I think I'm going to forgive it for that earnings report move, for that post earnings move. And when you look at what's coming up soon, you'll notice that there's another earnings report. So, is there any kind of catalyst in here that you can use to kind of get in on this kind of ticker? Well, if you go down to a lower time frame chart, you'll notice that there's a 195-minute squeeze. So, with an additional squeeze, and then again, you're starting to see that volume shift. The volume is oversold, starting to creep higher. This right here is trying to trigger higher on that 30-minute chart, which is what you want to see for an entry. We have the candles shifting from red to yellow to green, and that's occurring on high volume, which is just a little bit of a signal there of a trend shift. And then if you go to a 78-minute chart, we have a squeeze there too, along with some buy signals. So I think this one's trying to shift to the long side. Additionally, as I mentioned, it has earnings coming up, and anytime you have earnings coming up, you just want to pay attention to those pre-earnings timeframes. In this case, we're going to be entering the hot zone, which is that 21 bar time frame before earnings in about 3 days. So, this stock, as I mentioned last quarter, was a little bit lackluster surrounding that earnings report. But with those multi-time frame squeezes, you can still get a rally going into that report, especially, with those additional setups. So what kind of trade could you use? In this instance, I think selling put credit spreads would probably be the most simple thing to do, just because you are at a critical support zone right above that 8 EMA. With those squeezes, you could also try to set up some butterflies. You would not want to do a butterfly in the earnings series because that's going to be a rising vol series and the volatility has already started to increase here anyways. So if you wanted to do a butterfly, you just need to decide, where do you want to place it? Do you want to just go with a monthly series and, look at June? Or do you want to try to go all the way out into right before this earnings report? Because that's going to determine what price target you're going to use. So without knowing your time frame and what you kind of want to do with it, it's kind of hard to determine which price target you'd use. But basically what you do is you just want to look at the expiration date and you want to look at the expected move targets, and then you want to overlap those with your Fibonacci targets, your key psychological values, and your high open interest levels. So for example, if you look at the options chain right here in Netflix, if you only wanted to trade it going into next week, that's going to be 11 days till expiration. You have a 23-point expected move. So you would not want to say, hey guys, let's create a butterfly at 700 for next week, because the likelihood of that happening is just incredibly low. So you wouldn't want to do that. With the 23-point target, you'd probably say, okay, right now we're at 644, so could we trade up into 665? That would be a lot more reasonable just within the next week. Then you'd want to go down and look at your high open interest targets and say, okay, is there a lot of open interest at 665? Well, in this case, there is more open interest in 665 than some of these other strikes, but there is quite a bit right here at 670 or also 660. So you could even go with a little bit lower of a price target. For example, 660, just be a little bit more conservative. Then you wouldn't need to see that full expected move. You could do something like a 645. Oops. Let's do butterfly. So you could do, for example, like 645, 665, 685. It's only going to cost you $4.56 for $20 wide. So that's a pretty good deal. Pretty good deal. Pretty cheap. Pretty simple. I think in and out. You'd also make it a little bit smaller. You could do, for example, 645, 660, 675. That's only going to cost you $3 for a $15 wide butterfly. So those are two examples of trades that you could use for next week. If you wanted to go all the way out and capture the move for the entirety of June and into July, this earnings report is supposedly going to be on the 17th of July. Now, keep in mind, it's not going to be confirmed by now, so it could change. But that would place this earnings report in this series right here. So the 19th, you would not want to use the exact same series for a butterfly, but you could buy some long calls in that series if you were just going to do long calls because of the rise in implied volatility. So in this case, if you wanted to do a butterfly the week before earnings, you'll see that the expected move is 40 points into that time frame. So at that point, you're getting to the likelihood and the potential reality of what if this stock trades up into 700? How cool would that be? That's where the previous all-time high is. It's slightly outside of the expected move. It could happen. Not super probable, but it could happen. And these options aren't that expensive either. I will point out that the volume is not great. Typically, you want to see a couple hundred contracts at least of volume in options that you're trading. You also don't generally want to see this wide spread. A 70-cent spread is going to make it pretty challenging to do any kind of butterflies. But if it fits within your risk parameters, you do something like a debit spread. You do, for example, 645, or even if you did it like a little bit further out of the money, let's do 650, 700. So for something like that, the spread's not that wide for a $50 wide spread. You're trading between $13.78 and $14.60, so it's less than $1. And you're paying $13.78 for $50 wide spread. So I think that's pretty good. It just depends on if, that size trade is going to be too much for your account or not. If it is, you'd need to increase this value right here. So instead of 650, you could do, for example, 660 or 670. Just make your debit spread a little bit smaller. That'll bring down your cost basis. But doing that is also going to make your spread further out of the money. So Netflix would need to move more before you would hit break even. So those are a couple different examples and options for you guys. If you have any more questions, let me know. You can follow me on YouTube right here at Trader Danielle. I've been posting quite a bit on different trade reviews on basically just different trades that I've been doing. So feel free to check that out. Other than that, let me know if you have any questions in the comments below, and I'll see you in the next video.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe and also give us a like and comment down below. If you want to learn more about us and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com where you can join us for more info. Thank you very much and have a great day.